2014, if you can recall, the government had launched the first equity-based ETF, exchange tradable funds. The 2014 step was towards equity trading funds. Now what the government has given, the cabinet has given approval for is for a bond equity trading fund, exchange trading fund. So earlier was an exchange trading fund for equities, now it is for bonds. The cabinet has given permission for creating an umbrella bond ETF through which we hope to diversify the investor base and bring in a lot of retail investors into the market. And how will we have the retail investors come into the market? Because the units are not going to be valued more than 1,000 rupees each. Therefore, the investor doesn't have to hold large quantities of money to go and buy 1 crore worth. For the bond, he can participate in this even by just buying a 1,000 rupee unit. This will deepen the bond market. And all right, when a retail purchaser takes it, does it mean he'll have to sit till the entire duration of the period for which the bond is issued? No. He can happily go and trade it in the market and get his liquidity whenever he wants. You can buy or sell through 3 different methods. One is through the exchange. So after the new fund offer is made, bond ETFs will be listed on the exchange. Investor can buy or sell these units on the bond ETF anytime during the trading hours on the exchange at the prevailing price. Each of them will carry a ISIN number, International Security Number. Within that number, the buying and selling can happen. So the first one I said is through the exchange itself. The second could be when you're using the route of a market maker, where when there are no buyers or sellers, the market maker will buy or sell the exchange traded fund, those units that is, and aid liquidity on the exchange. To provide for this, what the cabinet has done is to make the market maker to have an inventory or to keep an inventory of ETFs, those ETF units worth 1 crore at a time. So, for the market maker to play in the absence of buyers and sellers, he should have an inventory of such ETF units within worth 1 crore, and therefore he can come in when he wants to play. Then the third route can be through the AMC. Large investors can also buy and sell ETF units directly through the alternative method units. That process is known as ETF unit creation and redemption. That process is what I have explained here. Transaction value for such ones, the large ones, will be 25 crore or above. So a retailer can buy 1 unit of 1,000, or a market maker can intervene, buy and sell if he has 1 crore worth of these units in his demat account, or when a large buyer wants to buy and sell, it should be for value of 25 crores or more. This umbrella program, now that it's approved, will have the AMC file the product with the SEBI first of all, so that we will be fully compliant and due diligence of the SEBI will be followed. Now that the approval has been given, post going to the SEBI will give the approval and the AMC will then discuss the borrowing needs of each of the issuer. In this case, the CBSE or the public financial institutions or the CPSUs. Once their debt requirements are very clearly put down, then an ETF issue will happen. A launch date will be finalized, index will be created, and then the new fund offer will be open for subscription. Subscription either by retail, through the exchange, or through the market maker, or through the large AMCs which can get into this matter. After the closure of the new fund offer, ETF will subscribe to these bonds for the issuers, and then at this stage, the first time that we are offering for 3 years or for 10 years.